Good morning, everyone. This is Amit Pabari, founder and managing director of CR Forex. After Trump got elected, entire market was expecting that Chinese economy might face some trouble because of tariff, but the data points are showing something different. So in today's presentation, we are going to discuss what is happening in Chinese economy, and we will end with outlook on rupee. So if we see, Chinese currency got appreciated by 1.5%. Hang Seng Index has moved up by 25%. Shanghai Composite Index has moved up by 25% in last 3 to 4 months. Whether the appreciation in the currency or index going up is just a coincidence or data are also showing the same strength. Let me first show you Chinese economy GDP data. If we see from last 3 quarters, GDP has been rising. Apart from that, they've been able to achieve annual growth rate of close to 5%. There were three reasons primarily for higher GDP growth. First, proactive stimulus taken by Chinese government. Export grew and manufacturing activity also performed well. If we see Chinese industrial production data, that is also robust and it has been growing from last couple of months. As we all know that China is mainly driven by manufacturing activity, and if you see one more data point which is called capacity utilization rate, capacity utilization rate is also increasing. Now once capacity utilization rate increases, it shows that overall demand consumption in the economy is doing good and they are being able to export at a decent pace also. Now lot of people think in the market that China is very much dependent on US for its exports, but let me show you an interesting data point. If you see, earlier China used to export 7% to 8% of its GDP to US. Now it has drastically decreased over the period of time. Currently that ratio stands at only 2.8%. Overall, they have reduced their dependency on US for their export, but despite that, they were able to increase their trade surplus. In last couple of years, their trade surplus has been constantly increasing. For the year 2024, they have hit the trade surplus close to 1 trillion USD dollars. Now let us see what is the technical outlook on Chinese equity market. If we see Hang Seng chart, technically speaking, on a weekly basis, it has given a breakout. Now 23,000 is going to act as a very strong support for Hang Seng Index, and we are expecting that it can move towards 25,700 and 26,900. As far as its currency is concerned, USD CNH had made a triple top kind of a pattern at 7.37 kind of a level. If 7.2350 is taken out ideally, then it should move towards 7.19 and 7.15 kind of levels. Now let us discuss outlook on rupee. On the positive side, if we see, crude oil prices are under pressure. Second, dollar index has dropped from 110 levels to 106.50 kind of a level, and it is expected that it is further going to go down towards 105 kind of levels. Third positive aspect is most of the emerging market currencies are appreciating. We have seen that Chinese currency and Japanese currency are also appreciating. And India's Q3 FY25 GDP is expected to grow at 6.2 to 6.3%. Last time when the GDP data came, it grew at 5.4%. And lastly, in the last week of Feb, we are expecting some kind of inflow basis on MSCI rebalancing. The funds will be close to $1 billion. On the negative side, FIIs have been selling in Indian equity and debt market. Total outflow because of FII selling is close to $11 billion in last 2 months. Second, RBI has announced buy sell swap close to $10 billion. Generally, whenever RBI does that, It means that RBI is injecting rupee liquidity in the system. Whenever rupee liquidity increases in the system, technically speaking, it adds pressure on rupee. With these events, there can be two possibilities. First scenario can be rupee takes a support at 86.50 kind of a level and can continue to trade between 86.60 to 86.95 kind of levels. Second scenario can be the pair breaks the support of 86.50 and can move towards 85.90 to 86.10 kind of levels. Now let us discuss strategy for exporters. For exporters, we will suggest that they should use any uptick towards 86.70 to 86.95 kind of a level as a selling opportunity, and they should keep a strict stop loss of 86.50. If 86.50 is broken, then ideally the pair can move towards 86.10 kind of levels. Now let us discuss strategy for importers. For them, we will suggest that they can buy 50% of their import payment which is due for next 30 days between 86.50 to 86.60 kind of levels. For remaining exposure, they can wait for lower levels of 85.90 to 86.10 kind of levels. With this, I will end my today's presentation. Jai Hind, Namaskar, फिर मिलेंगे next week. Thank you.